Bitcoin is moving again, but not for the reason most people think. Right now, Bitcoin is hovering around the $67,000 to $69,000 range, after a series of sharp moves driven almost entirely by the Iran conflict. And if you've been watching closely, you'll notice something strange. Every time tensions escalate, Bitcoin drops. Every time things calm down, Bitcoin bounces. So what's actually going on here? Because depending on who you ask, Bitcoin is either a safe haven or just another risk asset reacting to global news. When the conflict first escalated, Bitcoin dropped fast, even dipping into the low 60K range in some moments. That's because traders did what they always do in uncertainty. They de-risk. They sell first, ask questions later. But then something else happened. As soon as there were signs of easing tensions, even just talk of negotiations, Bitcoin started pushing back up toward that 68K range. At one point, it even climbed higher toward recent highs in the low 70Ks during the conflict cycle. And this is the key insight most people are missing right now. Bitcoin isn't acting like a pure hedge. It's acting like a real-time sentiment indicator. It reacts instantly to war headlines, oil prices, market fear, risk-on versus risk-off behavior. And that creates a very specific kind of environment, not a straight bull market, not a crash, but high volatility with opportunity. Now, in terms of levels, support has been forming around that mid-60K range, roughly where buyers step in after sharp drops. And resistance is sitting closer to that 70K, 73K zone where momentum starts to slow down. So right now, Bitcoin isn't trending, it's reacting. And that's important, because markets like this are where positioning happens quietly. Now, while I was looking into all this, one thing that kept standing out is how much this all comes down to infrastructure and usability. Because if global instability continues, and crypto keeps getting pulled into these macro conversations, the projects that actually support scaling and real-world usage start to matter more. And that's what led me to take a closer look at Bitcoin Hyper. Not financial advice, but I went through their site and started digging into the white paper just to understand what they're building. From what I can see, the focus is on improving transaction speed and efficiency, essentially trying to make Bitcoin more usable in environments where demand and activity increase. And whether it's this project or others, that trend matters, because if Bitcoin continues to sit at the center of global financial reactions, the infrastructure around it becomes more valuable, and that's usually where early attention starts to build. Not when everything is already moving, but when the foundation is still being formed. Now, if you are looking into early-stage projects or pre-sales like this, one thing I'll say, and this is just from experience, is that how you buy actually matters more than people realize. A lot of people default to Ethereum and just deal with the fees, but more users are starting to use networks like Solana when possible, just because it's faster and cheaper. And using something like the best wallet app makes that whole process a lot smoother. You can manage multiple assets, move across chains, and access opportunities without overcomplicating it. But bringing it back to Bitcoin, this is the real takeaway. We're in a market where price isn't just driven by crypto anymore. It's driven by global events in real time, and that means things can shift fast, up or down. Not financial advice, but this is one of those environments where being early matters more than being reactive. If you want more updates like this, make sure to like and subscribe, and I'll be back with more crypto news soon.